I am here. Audio 1 2, audio 1 2 1 2. All right, so that's the first time I've seen you use the number 4. So I'm gonna go. If you can hear me, use the number 5. Use the number 5 instead of the
I love
yes.
it when you get in line, Hubert. You just get in line.
Yes, ma'am.
I was just trying to be different, not say yes, not say no.
I
Just
get
get right on it.
All right, guys.
Gotta get thinking.
I'm gonna get started. You should see a slide on here that says how to find a new trend trades in any market. I'm gonna talk fairly quickly. I don't want to take anybody else's time because it's kind of like a domino effect. The first asshole, it takes 10 minutes extra. The thing ends up being an hour long. So I'm gonna try to stay on point and on time. All right. So usually when you go through the evolution of being a professional trader, and hopefully that's what most of you are trying to do, right? You're either doing this as a hobby or you're trying to become a professional. Either way, I think your goal is to try to make more money than you are losing, right? Like you're trying to make more money than you have at risk, right? You're trying to make more money. So when you start out as a trader, you probably start out like everybody in the business, right? You start out, you don't know anything about the business. Your charts are clean. And then you start getting into the stochastic, the MACD, the RSI. And then a couple years into your evolution as a trader, you got so many damn indicators on the chart, you can barely see the price action. Can anybody relate? And then what you do is you're like, hey, I've went overboard here. I got a little carried away. Now I have to start filtering away and picking through all this stuff that's on my chart. Which one of these things helps me make a better decision? And which one of these are hindering me making a better buying and selling decision? And then you just systematically go, okay, hell, that thing's doing the same thing that 5 of these other things are doing. I can probably get rid of all 5 of those. So I'm going to walk you through what I like to use as my foundational scanning tool to figure out what markets I'm going to trade. Now, I have a revolutionary way of trading. What I do is I try to find the trends and I trade those. If it's not trending, I try to stay away from it. So we're going to use the analogy of Derek Shivers, the guy that used to run CD Baby. And he has a theory of like this. It's either a hell yes or it's a no. Like if it's a business ideal or something that you're trying to get into or a trade, if it's not a hell yes, you're going to pass. If it's, well, let me think about it. Nope, that's a no. Well, it's either it's hell yes or it's a solid no. So warning, disclaimer again, never trade more money than you can afford to lose. Not a lot of people make money when they do trade. You may be one of the few that do. Just make sure you get educated on all the risks. So make sure that you read all the risk disclaimers, okay? There it is. All right, so my name's Hubert Centers. I have a no BS approach to trading and investing. Let's walk through. Now, this slide is to convey to you that I'm no longer poor. I don't know why we all do this. I think it's just because we all do it. I used to not have money, and then I had money, and then I lost it, and then I made it back again. Everybody understand the rags to riches story, right? I am just a normal cat, just like you are. I put my jeans on one leg at a time. There's nothing really special about any of us other than we may have more time in the markets than you guys have. So congratulations, you're in the right place at the right time, and here is why. Real quick, are you guys more, and individually, are you more into fundamental analysis? If you are, type in FUND, or are you more technical in nature, or do you do both? Like, are you fundamental, tech, or both? I don't think there's anything being either one or both. I think I slant more of the technical direction just because I think it's more pure, but both is good too. I don't think there's a ton of people that are just fundamental in nature that trade a lot anymore. There are probably a few of them out there, but not a ton. And then real quick, what do you trade the most of? Do you trade stocks, options, futures, forex, bonds, gold, crypto? What do you trade the most of? I mean, I know all of us in here trade a lot of different things, but what do you trade the most of? I'm just trying to get a feel for the crowd this morning. All right, so we got a mixed crowd here. Most of you are technical, a few of you are fundamental, and both. And we got futures, options, futures, weekly. All right, now time frame. Are you a well, let's do this next question. Are you a trend trader or a counter trend trader? Are you a trend trader or counter trend trader? These are really important questions. If you don't know the answers to them, I probably wouldn't trade yet if you don't know if you're a trend trader or a counter trend trader. And then what is your preferred time frame? Okay, your preferred time frame. Are you an intraday scalping day trader? Are you a swing trader on a smaller time frame? Are you a medium time swing trader? Are you a longer term swing trader? Are you an investor? Like, what's your preferred way to trade all these markets that we compete in every day? All right, I'm getting a good feel for the group. All right, cool. All right, so what I'm going to talk about is Ichimoku, and no, I didn't sneeze. That's how it's pronounced. You're in the right place at the right time, because if you're into charts and if you're into trading technicals, and if you're a charting fan, you should really get into this stuff. All right. You now have a new opportunity to take your trading to the next level. So what does this work on? This works on stocks, options, futures, Forex, bonds, gold, commodities, cryptos, and a lot of other things. All right. Now, it doesn't work on everything great, but it does work on quite a few things. All right. So it's your job to kind of figure out if it works with your thing that you like trading with. Now, what time frames can you use this on? You can use it for day trading, swing trading. You can use it for investing, longer term holds and stuff like that. It's pretty robust. It's pretty user friendly. You can kind of make it do pretty much anything you want to within reason. Now, this will be different in a good way. I'm going to go off script. I do have PowerPoints here. Well, first, I'm going to teach you the theory. All right, the theory of this application, and then what I'm going to do is I'm just going to scan the markets with you and tell you where I'm at and what I'm doing. Okay, and then at the end of the presentation, I will make you an offer. And if you want to learn more, you can invest more in your education. And if not a big deal. I'll still help you out and tell you what I think about the markets. And if I got time, I will then take stock symbol requests or symbols in general, and I'll tell you up, down, or sideways and where I think it's going to go. All right, so this is the results of the backtesting. Anytime I come up with a harebrained idea of something that I think may work in the markets, I want to backtest it. All right, I usually hire a backtester or a programmer and go, hey, I've got this crazy idea, test this. And they're like, yeah, man, that idea is terrible. It doesn't work. I'm like, okay, well, it's just an idea. I'm just testing things out. This was how this one came out. In the S&P 500, the results from the 5 years before I did the study, 430 out of 500 stocks. So it had about an 86% hit ratio. That's good. I mean, it worked across the board on about 86% of the stocks. If you would have taken every signal, you would have got a 33% return, which is pretty good. If you would have changed that approach slightly and not only just did just the signals here where it was long, short. In other words, if you did every signal and you weeded out the counter trend signal, so in other words, if you got a massive uptrend, you wouldn't short that, right? You'd only go long that. And if you waited for a 3-day or a 3-bar confirmation, that's going to increase your return from 33% to 79%. All right, and that's across all the stocks in the S&P 500. So it's got a pretty good track record. It's been profitable on 29 currencies over the last 10 years. So that's good to know. And then when we look at, now you do have to use a multi-time frame analysis in order to get those type of returns. And the one that I used on that back test was daily, hourly, 10 minutes. So it's, I guess, daily, that's the big one, hourly, which is basically 60 minutes, and then also a 10-minute time frame. And I combined those three, and that's what gave me the return on the backtesting model. All right. So you should see on your screen a thing that says time frame selection. If you do, type yes in the chat box, please. If I lose you here, I'll lose you for the rest of the PowerPoint presentation, and then we'll be smoked. All right, so cool. So when I'm looking at this, if I'm looking at a daily time frame, in other words, if I'm looking at a cloud chart on a daily time frame here, then I know that I'm probably going to be in that trade for a couple weeks minimum. Okay, I'm going to be in it for 10 solid days because that's 2 weeks. All right, the chart is going to extend to the right 1 full month and give me information to trade over the next 20 trading days. All right. Does everybody understand that? All right. If I drill down and I go to an hourly chart, which is 60 minutes, then I'm going to be in that trade for days. At minimum, I'm going to be in it is 3 days. I can always be in it more. I can be in it less if I get stopped out, but the average minimum is going to be 3 to 5 days. Okay. If I'm looking at a 10-minute time frame, then the cloud is going to extend 2 to 4 hours, and I'm going to be in that trade probably at least 2 to 4 hours, right? Could be slightly less, could be slightly more, but those are the averages that I look at. So when we're looking at that stuff and when we scan later, when I ask you the question like, hey, that's a 60-minute chart sell signal, How many days will we get out of that? Well, we could get 3 to 5. It could develop into a 21-day sell-off. Who knows? But it's going to probably give you the average before it expands. Okay. All right. So move on to the next chart. So this is what you want. It is the #1 technique used in Japan. There's this #1 best-selling book for 7 years in a row, and this is the #1 technique in that book. You're going to know exactly what's happening in seconds. I don't know if you've ever tried to translate something from Japanese to American to Kentucky redneck, but it takes a little bit of time and it can get quite expensive. So the cool thing about it is you're going to know what's happening on the chart in seconds. It's really easy to use. It's really easy to find trending signals, so you don't have to worry too much about it being really complicated. And like I said, once again, it's designed to produce really clear signals. All right, the edge for you now. How many of you have used an indicator that showed you what the price action did in the past, right? We all have, every single one of us in here. Some of us might use some indicators that tell us what the current price action is doing, right? Like time and sales and stuff like that. Very few of us use indicators that will tell you what might happen in the future. Now, the ones that I like to use for that, there are 3 good ones. You could use Fibonacci's for projections, right? I don't know how to make my B's that way. All right. You could also use Elliott wave. Now Fibonacci's, they're a little harder to use than Ichimoku. Not a ton harder, but they are a little bit harder. Elliott wave is a good system to find trends and reversals, but the learning curve on Elliott wave is a little much for my taste for teaching beginner or intermediate traders trying to take it to the next level, just because the education is a little spotty out there on that stuff. You could put 10 Elliott wave guys in a room and you come out with 7 different counts. And I'm like, how can't you guys agree on this? Come on now. You could figure it out if you wanted to. So I like to use the cloud, all right? CLOUD. Those all 3 are decent in my opinion for giving you a future projection of what may happen in the market next. So if you're not into cloud, take a look at Fibs. If you're not into Fibs, take a look at Elliott wave. All right. Do you have a black chart with, it looks like a blue little stream rolling through it to the upside? So the first theory that you should be looking to confirm here, and this is the first little foundation of this indicator that is freely available on every single platform out there. This is called the cloud. So everybody we're going to treat it like we're 3rd graders. Everybody just type in cloud, CLOUD. That's the first thing you got to learn. That's the first term, cloud. If the price action of whatever you're trading is above said cloud, then you're going to want to get long said thing on chart, okay? So if the price action is above the cloud, long-ish is your stance, all right? Bullish. If the price action is below the cloud, then you're going to be bullish and you want to sell things or short things. That's pretty simple, right? The next thing you want to learn is it's going to act like a real-time support and resistance, and it's either going to let the price action bounce off air like a fluffy little pillow or a cloud, or it's going to act like a mini trampoline, or it won't work and it'll chew through that and the trend will potentially change on you. A fluffy little cloud, mini trampoline, mini trampoline, mini trampoline. All right, so we got our first term, cloud. Our second term is this yellow line called a turning line. I'm just going to call it the TURN. So we've got cloud, CLOUD. Next thing, type in to the Q&A session or the chat box, type in turn, TURN. All right. Now, think of this as a fast period moving average. That's not what it is, but we're going to pretend that's what it is because it's easier for me to explain it that way. So it's a 9-period midpoint average. And if it breaks the yellow, it could go to the blue. A lot of times it'll touch the yellow and then bounce off of there. All right. And then the next thing you're going to learn, write this one down, STD, standard line. So we've got cloud, CLOUD. We have the turning line, TURN. I'm going to put F next to this for fast. This will be medium, and the cloud will be slow. Now, the way I look at this is real-time support and resistance. If the yellow holds, good pullback long, bounce off of that. If the yellow does not hold, like in this case right here, yellow didn't hold, it goes to the purple and then bounces off of there. If the yellow and the purple don't hold, like in this instance right here, we're going either to the top of the cloud or we're going to the bottom of the cloud. And heads up, if the top of the cloud and the bottom of the cloud don't hold, then if you spend 1, 2, 3 days below the cloud, you may want to start shorting this thing. All right, so we've got cloud, turning line, standard line. The last thing we're going to learn is going to be lagging line. So everybody type in LAG, LAG. So we've got cloud, CLOUD. We have the turning line. We have the standard line. And we have the lagging line. Now, here's the cool thing about this indicator. I wish I would have invented it. I didn't, but I really do love the thing. This is telling you what happened in the past. The little white line is. This, the yellow and the purple line, is telling you what's happening now, also known as the present. And this is the cloud telling you what's going to happen probably next. So this is a future prediction algorithm, if you will. So you got past, present, and future. If now does not hold, it'll go here. If now a standard line does not hold, it'll go to either here or here. If 1 and 2 do not hold, then it will begin to drop like a stone and you can short the fire out of that thing. All right, now you should be looking at a bright white chart that says turning line, midpoint calculation, take the high and the low of the last 9 days and divide them by 2. This is how you calculate this thing. You're going to take the price action, you're going to count back 9 bars. You're going to find the low, which is going to be 434.39. You're going to find the high, 465.75. You're going to add those two creatures together and you're going to divide that by 2. The math is in the lower right-hand corner if you want to cheat, because I suck at math. I got D pluses in algebra in both high school and college. Most platforms are just going to tell you the hash mark right here, 450.07. Now remember, we're coming from below the cloud, so we're bearish in nature. The top of the cloud holds it. As soon as we break the turning line, we're going to go to the bottom of the cloud. If the bottom of the cloud does not hold, next place we're going to go is going to be to the standard line. So this is a short when it breaks the red line and hold until the standard line. Now, the standard line is the midpoint, and it is the where you take the high and the low of the last 26 sessions. And you're going to find the high and the low, and then you're going to divide that by 2. That's your midpoint. All right, so when you're looking at the standard line, so on this case scenario right here, this is the turning line. This is the standard line. Let's calculate the standard line. The green line, the answer is going to be 425.42. You're going to take the price action, count back 26 bars, locate the low price, locate the high price in that range, add those two together, all right? And then divide that by 2. The answer is going to be right here. The platforms are going to do the math for you. You don't have to do any math. You just have to understand this is bearish because the cloud's red and it came below the cloud. If it breaks the red line, it's probably going to go to the green line, okay? Now let's talk about how to calculate cloud spans. Midpoint of the turning line and the standard line shifted 26 bars forward. So what that means is what you're going to do here is you're going to take the turning line and the standard line. You're going to look at a midpoint and you're going to forward project in the future 26 bars to get either the high or the low of the cloud. Cloud span B is the midpoint of the high and the low of the last 52 sessions. Here's what this looks like. You're going to take a point in time. You're going to count back 52 bars. You're going to locate the midpoint, and then you're going to forward project in the future 26 bars. That's going to give you the other side of the cloud. Once again, every decent platform out there will do this for you. I'm just telling you how it all works, okay? All right, so lagging line is the last line we've got to learn how to use, and then we're going to get into the meat of the presentation. The lagging line is the price line close shifted back 26 bars. It's got a perfect name for it, right? Now, if you look up other educators or traders teaching you how to use this stuff, they're going to use weird names like Kinju. Like they're going to pronounce the Japanese names. I can't do it, so I use the translated English names. I think they're easier for English people to understand than saying Kinju, because I'm like, Kinju, what are you talking about, man? So the lagging line is just the price action shifted back. So if we take in a zoomed approach right here, and we go, okay, this is the price action. We're going to shift it back 26 bars. That is the lagging line. All right. This is the indicator that you want to look for on your chart. It's called Ichimoku. I break everything down into bits and pieces because I'm dyslexic. So it's ICHM, and then I go, okay, Ichimoku, cloud charting signals. Lagging line crossing the cloud is a really good one. It's slow, but it's really strong. Price line crossing the cloud is the one you're going to learn today because it's the easiest one visually to represent and find some really good trades. Price and lagging line touching the cloud spans crossing, the turning line crossing the standard line. Those are all decent signals. So if we look at this, you can see the lagging line crossing the cloud can be a major trend change. This is just an old ancient chart back in 2013 of Apple, right? Don't worry about this. This is the theory part. I'm going to do all live charts here in just a second. So when the blue line breaks through the cloud, then you can short it. The only problem with that is it's slow because it's lagging. Basically, the price actions are around about right there when you shorted that. And then you'd have to wait for this thing to go back above the cloud in order to cover it. And your price action would probably be around 530. So you would short it around 590, and then you'd cover around 530. It's not a bad trade, but look how much meat you left on the bone. So an easier way to do that is go, okay, what I'm going to do, as long as the price is above the cloud, I'm going to stay long. As soon as I get 3 bars or more below the cloud, I'm going to be actively selling or shorting that thing. And then 1, 2, 3 closes above the cloud. So in this case scenario, you would short it around 630, 620, and then you'd cover it around 470 or 480. Now, we still left a little meat on the bone, right? Because nobody can do this. You're not going to be able to short here and cover here. I've been trading for almost 30 years now. I've done that maybe 5 or 6 times in my life. It's very hard to do. I'm not saying it's impossible, but it's damn near impossible. The best way to do is try to get the meat in the middle, as I call it, okay? You're not going to get dead highs. You're not going to get dead lows. That is a loser's proposition. You'll go broke trying to figure out how to do that. So the best thing that you can do is do the best thing you can do and try to get the meat in the middle. So here's the way I look at this. 1 close below the cloud is an aggressive signal. 2 would be moderate. And 3 would be a conservative setup. That's just me. That does not mean that's the law. That is not the law of gravity. That is just how I look at it. All right. You could also use the lagging line touching the cloud. You can also use the price touching the cloud. That's another valid signal. You can use a faster signal if you want to do some intraday scalping, or if you want to do some short day trades or some smaller swing trades. You can wait until the price gets below the cloud, and you can do a criss-cross trade, or a criss and a cross trade. That's when the turning line and the standard lines tangle up and they cross, and then they head in the same direction. So here's the bullish signals for this indicator. Price above the cloud is obviously bullish. Price in the cloud is bullish if they come from the bullish slide. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning of trend change. Price and the lagging line will often find support at the cloud's edges. Cloud spans crossing may be a sign or a signal that the trend is changing. Be on the lookout for thick clouds after a run-up, which could mean that there's about to be another trend change. Now, that's the bullish signals. These are the bearish signals. I'm going to put them up on the screen. I'm going to get a quick drink of water here. Once you're done reading bearish, just type B in the chat box or the Q&A, and then I'll move on to the meat and potatoes here. I need a Halls. All right, I'm starting to see some B's. All right, so what we're going to do next here, excuse me, didn't mean to cough in your ear, but I did, didn't I? All right, remember, time frame selection. I'm going to use daily, hourly, 10-minute. If you want to go shorter, you can. I wouldn't go below a 1-minute chart. It gets a little sketchy after that. If you want to go weekly, monthly, 3 months, yearly charts, weekly charts, you can do it. I use this daily, hourly, 10-minute. You can go below and you can go above. Those are just my favorites, all right? Once again, my favorite is daily, hourly, and 10-minute for the presentation here. Best stops to use. How many of you in here suffer from premature? Almost went sketchy on us there. Premature profit taking. So in other words, you get in at X, you have a stop at Y. The market goes up here. then it stops you out, and then you get stopped out of it. Or worse yet, you get in an X, you don't have a stop, and it goes up, and then all of a sudden it pulls back. You decide to get out here, and then it goes like this. That's premature profit taking. If you suffer from it, there's a drug that can fix this problem. It's called the parabolic SAR. It's a free indicator. Learn how to use it. It will change your life if you learn how to use it properly. You can also use the bottom of the cloud if you're long and the top of the cloud if you're short, depending on your time frame. All right, let's take a look at some live charts. Enough of the theory. So now I'm going to switch over into live chart mode here. And if you can see my TradeStation, just type in TS. So I'm going to walk you through how I scan the market. So we're doing pretty good on time. It's 9:28, so I'm doing pretty good. The rest of this, believe it or not, is going to be spent on me going through the markets, okay, and taking Q&A. All right, is the rest of it. So I'm going to walk you through what I do on a daily basis, okay? So does everybody think they have a decent handle of the stuff that I've went over so far? You're not going to be an expert on it in an hour, right? You still need to do some more homework and figure out some of the ins and outs of this thing to play with it. All right, so the first thing I do is I'm hiding something from you. I'm going to show you what I'm hiding from you. I do it on multiple time frame analysis. Here's my daily, here's my hourly, and there's my 10-minute. I can't do it with hundreds and hundreds of people in here. If we do the multi-time frame analysis on every single one of these, I won't get through many of them. So what I'm going to do is I'm going to defaultly use the daily chart. Can everybody agree with that? Okay. All right. So what we're going to do is I'm going to scan all the futures markets real quick. We're going to go through them, and I'm going to test you on your knowledge of hell yes. All right. When we see a really good long, it's a hell yes long. When we see a really good short, it's going to be a hell yes short. If it's sideways, we're just going to like, hey, I'm confused. I'm just going to leave it alone. Okay. So, and I'll get to a little bit of the multi-time frame analysis maybe at the end if I have time. So what I'm going to do is I'm going to extend this daily chart to the right. So it's going to take up most of the screen for us. Okay, cool. So now I'm not hiding anything from you. Now I'm going to go up here and I'm going to look at the S&P 500. Is the S&P 500, does it have a good long look to it or a good short look to it? Like right now, if you just look at it like real, you just should, that's a long, right? That is a long that is pulled back to the standard line. Does that make sense? Now, notice when the COVID came, 1, 2, 3 days below the cloud, notice how it caught that, okay? And then if you were aggressive, you could have covered when it closed back above the turning line or the standard line, or you could have said, hey, I'm going to short it here and I'm going to hold it till here, or I'm just going to avoid all this and I'm not going to go long until it goes right there. Is everybody on the same page? Now I'm going to go through these markets. It's a good looking long. S&P is a good looking long. I will then compare the S&P to say the Dow. The Dow is a decent looking long. The Russell is a decent looking long, but the S&P and the Dow looked way better to my eye, so I'd probably trade those, all right? And then I'm going to compare it to the NASDAQ. NASDAQ, look at there. That's beautiful. Look at that. That's a hell yes, great looking long. Of all 4 indexes that we just looked at, I have kept most of my people, which are my subscribers, on the long side of the NASDAQ for that reason. Okay? Does that make sense? Long. Keep it long until it goes back below here. Turning line test, standard line test. All right, some people are saying they lost me. Let me cue my audio 1, 2, audio 1, 2. Are we good? Just give me yeses if most of you can hear me. I know some people are going to have issues regardless of what I do. All right, now we're going to go into the Euro Stocks 50. All right, that's a decent looking long, right? We're going to look at the DAX. That's a decent looking long. But of all the longs we looked at so far, this one is the prettiest so far, the NASDAQ. So I would focus there. Now let's take a look at interest rates. The Euro Bund, what is that? That's a short. It's below the cloud. It is about to tickle the bottom of the cloud again and go a little lower. Let's take a look at the 10-year Treasury note. What is that? Long, short, or leave me alone? That's a brand new fresh long. It has been in the box of pain for a while here, but that's just because the Fed has been doing some crazy stuff with interest rates. So 2 days ago, it initiated a long. So I'm going to be long some 10-year notes. What about the 30-year? The 30-year is in the cloud. For me, that's a leave me alone. That's not a Hey, this looks great long. Hey, this looks great short. It's like, hey, it's in the cloud. I'm going to leave it alone. What is gold doing? Gold is a long, but it's sideways to slightly higher. This is not a great long. I would leave it alone. Okay. It's just, it's got a little bit of a sideways nature to it. So I would just pass on gold. What about copper? Copper, the other shiny little metal, is a great looking long to my eye. Does this make sense, what I'm showing you live on these charts? So right now we would be focusing on the NASDAQ. We would be focused on the 10-year treasury note. We would be focused on copper. All I'm doing every single day is I'm looking for this, but I'm not just scanning on a daily. I'm also scanning for a 60-minute, and I'm doing for a 10-minute chart too, because a 10-minute trade above the cloud on copper is going to be good for how long? 3 to 5 hours. A 60-minute sell signal on copper is going to be good for how long? 3 to 5 days, right? Same way we used our time frame analysis earlier. All right, let's take a look at crude oil. So crude oil, look at there, is a decent new, brand new long. It's been up for about 7 to 10 days. I like crude oil. It looked good. We actually bought crude oil when it closed above the turning and the standard line down here on the anticipation it was going to bounce to the bottom of the cloud and then chew through the cloud. Notice here, we got short when it dropped below the cloud and stayed there until pop, it goes back above the purple line. Pretty simple, right? Now remember, this is telling you past, present, future. Let's take a look at some other markets really quick. Feeder cattle. If you trade cattle, this is sideways. It's above the cloud, but it's sideways, pass. Live cattle. Sideways, but above the cloud. This is a pass. It's not a great look. Lean hogs, sideways. It's not up, it's not down, it's kind of sideways. It is above the cloud, but it doesn't have a great look to it. Leave it alone. Bean oil. Bean oil is in the cloud, therefore it is a pass. All right. Corn. Corn is working its way through the cloud right now. Corn is just leave me alone for a second. Soybean meal, sideways, leave me alone. Let's go to wheat. This is a decent short. It'll probably go to 480. So far we found NASDAQ long, 10-year note long. We also had copper long, and now we got wheat short, right? You see I'm making a wish list of stuff I'm going to trade next week. All right, let's take a look at oats. Oats, what is that? Is that a long, short, or leave me alone? I'm just going to quiz you and quit talking for a minute. Is that a long, short, or a leave me alone? Yeah, it's a better long than short for sure. It's pretty looking, right? So it's a hell yes. I'll give that a shot to the long side. All right. What about rough rice? Rough rice for the longest time here it was vertical, and then the contract rolled over, and now it tested the bottom of the cloud. I would give that a buy at $14. All right. What about soybeans here? Soybeans is a brand new fresh long. I would give soybeans a shot on the long side with a potential target of 896. Let's take a look at cocoa. Cocoa kind of still stuck in the cloud. Leave it alone. Sugar is about to be a long, but is not there yet. All right. Coffee is what? That's a hell yes. That's a great looking short. It's probably going to work its way down to $80. All right. Now coffee's hard to trade, so be careful with it, but it does look good as short goes. All right. What about cotton? Cotton is a good looking long. Next target will be $65. And then OJ, decent looking long. Next target 140. Now you're probably saying, man, I've never even heard of some of these markets. Well, you get to the stocks. All right. Watch how quick and easy you can make this type of stuff. See where it says S&P 500? What I'm going to do is I'm going to double left click here. You see how this is all changing? So I'm just going to double left click. And now I have a list of new below. So MYL is a new below the cloud. Oh, looky there. I can short that thing Monday and probably make money with a target of about 1325. Well, what about AFL? That's new above the cloud. That's a new long. That one doesn't look as good. So I'd be like, hey, let me see if I can find a better one that has a decent upside potential. AIG. That's still just okay, right? What about AXP? That's kind of just okay. All right. CB, but you can filter this stuff on daily, hourly, weekly, 10-minute, 2-minute. You just have to set up your charts and then click a couple of buttons like this right here, And now you can filter new below, new above, new above. Look, we've got way more new aboves. So, and then what you do is you just filter through these things, and then you're just looking one that catches your eye, and you're like, man, that looks really good. So what I'm gonna do is I'm gonna filter through a few here and see if we can find a couple really good juicy ones. No. Oh, hold on. That doesn't look too bad. That one looks decent. EQIX would be a decent long with a target of around 715. Okay. Hasbro, not too bad. Harley Davidson, not too bad. HST, IBM. All the charts look weird. So I'm just scanning through them fairly quickly. All right, I like that one. KIM, Kimco Realty. It jumped above the cloud, pulled back into the cloud, and one day closed back above the cloud. Probably goes through 14 on the way to 16. No. What I want them to do is I want them to take off and leave me, and then buy a pullback is what I want. So on all the ones scanning from Friday, there's not a enormous amount of great looking ones, right? Because we had a little sell off the day before, right? And then we had a retracement from that. That's not bad. Oracle, decent long. Royal Caribbean Cruise Lines, maybe target 80. RGN. So I'm just flipping through these, see if I can find you a couple. Oh, there you go. SBAC, decent long with a target of 320. Starbucks, good trade, probably goes to 90. SCHW, SO, no. SYF, no. I'm almost done with the scan, and you can see it doesn't take more than 3 to 5 minutes to really just filter through these and see if you can find a good. That one I like. VTR, good long with a target of 45. And then we got WY. And then the last but not least is Zion. So what I do over time is I now build me a portfolio of things that look really good on the long side and things that look really good on the short side. So what I do, I then have a list of things that say, hey, here are my swing longs: AMD, Amazon, Netflix. And I build the process every day by going through those scans and looking for really juicy trades. All right. And they'll say ES looks good, DAX looks good, live cattle, NASDAQ, oats, OJ, platinum, rough rice, the Russell, the 10-year, the YM, ABT. And what I'll do is now I have a shopping list next week. Those are the ones that I like. Now, here are some of the ones I found the other day. Soy, right? TY, AIV. And then I'd come down here and look at some of the others. And I would start making a new shopping list and add to or remove the ones that I don't like. I do the same thing for the short side. So on the short side, these are the things that I like on the short side. We already talked about this earlier. Coffee, right? And then you just go GILD, right? VNO, Wells Fargo, WRK, and then here's the new short list, right? So it would be the Bund, it would be Verizon and stuff like that. So that's what I'm looking for when I'm looking at that stuff. So what I'm going to do is I'm going to switch back to PowerPoint real quick. All right. I'm going to tell you how you can learn how to do this more if you want to. And then for the remaining period of the time, I'm going to take Q&A. The only thing that I ask is when you ask me a question, if you want me to look at your stock and tell you where I think it's going up, down, or sideways, is, well, what if you don't have TradeStation? All right, good question. If you don't have TradeStation, I'll do a quick thing that you can do on, let me grab a browser, new window. Watch this. You can do this too. If you don't have a TradeStation or a Thinkorswim, TradeStation and Thinkorswim have a really good scanning package that makes it easy to do this stuff. Not everyone's going to have that. So what you can do is you can go to this company. This is free, but they're going to add you to that, stockcharts.com. So stockcharts.com, I'm going to go through this fairly quickly. Stockcharts.com, they're going to add us to death. We're going to go charts and tools. We're going to go down here and we're going to go to predefined scans. And then we're going to go scroll down here to candlesticks and we're going to go Ichimoku patterns. I'm going to hold down control. I'm going to go moved above the cloud, 618 stocks, move below the cloud, 104 stocks. And then from here, what we'll do is we'll filter out by exchange. We'll go straight to the NASDAQ. let's go right here, and then I'll build you a chart, and we'll go NASDAQ. So I'm going to click on this chart button and build us a chart that we can then link to. So then what I'm going to do is I'm going to remove all this stuff. I'm going to say I don't want anything on the chart other than Ichimoku full, make this none, make this none. I'm just getting all the busyness off of the chart really quickly. I'm trying to do a decent job on time here, and then update. Now, what I can do is I can now go, okay, ABEV. This is a free service, but they are going to put ads on you, so just be careful. That is a new fresh long. Do you see that right there? All right, boom. And then you come back over here and say ACER. It's a little bit more manual as opposed to doing it on TradeStation or Thinkorswim that have really good scanners, but you can still do it. It's doable, and you can just build you a list of things that look good on the long side, like ACER. All right, then you come over here and go ACIA, and do it like this right here, and pop it right there. All right, and that doesn't look great. It looks sideways. And then you can also do it on the short side, right? We're going to sort by the exchange because this one is filtering for move below the cloud. Go down here to this CWBR, and then place this in here. Put it right there, and go like that right there. That's a good looking one. It's a penny stock though, so it's going to be harder to trade. Okay, so let's go see if let's go discovery here. DISC, go right here, click it right there. I know I'm going through this stuff fairly fast because I only have an hour. That's a good little fresh short, probably goes back to 17, okay? All right, now let me get back to my PowerPoint. That's stockcharts.com. That's a free scanning tool, but as you can see, they're adding me to death over here, and they're going to add you to death too, so you're just going to have to deal with that. That's a part of a free platform. If you're not paying for it, heads up, you are paying for it somehow. All right, so let me get back to my PowerPoint real quickly and the trade setups. All right, we covered the trade setups and I scanned the markets for trades. All right, so from there, now let's take a look at, here are some success stories. The course was awesome. I've taken one bond trade and made over $900. Do you think I'm happy? I just entered the bond trade, shorted again, where I took profits earlier today after you made me greedy for possible further drops. So I'm happy dancing. I don't know what happy dancing is, but I understand what she's saying. This is the first time I've had a successful trade during the course. I have the hardest head in the world. You couldn't have made it simpler. All right. Thanks. You're likely the only reason I've been kept at trading. And now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the gold trading class. The webinar series was a great experience, very informative, educational, and lots of fun. But that's no surprise. All of your courses have been great learning opportunities, great values. All right, so will you be one of our next success stories? Now, I'm not going to blow smoke up your rear end. I cannot make all of you profitable. That is impossible. Number one, not all of us can be profitable in the first place. And number two, not everybody's really into learning new stuff and getting better at stuff. I would say a high percentage of you guys are, because you're attending a webinar on a Saturday at 9 in the morning, right? So I'm inviting you to join us. So who is this not for? And I'm serious when I'm saying this. This is not kind of a joke at all. If you're a holy grail seeker that suffers from hopium, in other words, if you think you're going to take a $3,000 account and this is going to revolutionary change your life, and then in the next 2 months, your trading account is going to be worth $2 billion. That is an unrealistic expectation to put on both the market, my ability to teach you, and your ability to learn said information. All right. So it's going to take a while, right? Now, this will help. It'll shave about 3 years off of your trading education, knowing how to find good trend trades. It will do that, in my opinion. All right. Now, if you're a guru surfer, if you follow all of us on here and 40 other people, pick your top 3 and follow 3 people. And hell, even 3 individual traders, we're all going to have different opinions of which way the market's going, depending on what time frame we're looking at. So I would pick one if you can. And if it's not me, that's fine. Pick somebody else on this webinar that you're into. If you can't make a decision, I'm obviously not your guy. If you like to make things more complicated for no good reason, please just never, ever buy any of my courses. Please, just don't do it. It's not going to end well for me, and it's not going to end well for you either. All right, now who is this for? If you're serious about making real money in the markets, which I think most of you are, if you are looking for a proven system according to the backtesting model, right? And I can tell you it's worked for me in the past, the present, and hopefully it'll continue to work for me in the future. If you can follow a simple set of rules and directions, and if you know that your success is actually tied to you taking action, you and I will probably get along just fine. So here's a fraction of what you'll learn. Number one, it's the #1 best-selling Ichimoku course on the market. 7 proven setups, or my favorite setups. Trading rules and indicator settings. Checklist with cheat sheets with entries and exits. Stop losses and targets on every single one of those. How to scan the markets with Ichimoku. I gave you a little bit of class on that today. How to filter out the best trades. I'll get into that more in the course, so that you never guess what to do next, and how to avoid the dreaded head fakes. There are dreaded head fakes with every indicator out there. Your job is to figure out which ones those are, and I'll show you how I figured out on Ichimoku. So the Ichimoku cloud charting course retails on our site for $4.97. We sell it all day long, every day at that price. I'm going to throw in 1, 2, 3, 4 follow-up webinars live like this right here. So once a week for the next 4 weeks, we will get together on Tuesday evening, and we will all scan the markets collectively together. It won't take long. It takes anywhere from 4 to 15 minutes. It doesn't take long, and then the rest of the time I'm answering questions from people. I'll scan the markets with you every week for the next 4 weeks. You know, a webinar series like this. If you want me to throw you in the live trading room, I'll do that too. All right, that's a total value of $982. Your special offer for today's webinar is $297, so it's about a 50% discount. All right, one-time fee, lifetime access. I'm only taking 28 people. There was 28 people that just graduated last week, so I've got 28 spots available. All right, it is a one-time fee, lifetime access. If you need to be in there more than 4 weeks, we will do it. Now, if you don't need to be in there more than 8 weeks. If it takes you longer than 8 weeks to figure this out, this particular strategy is just not for you. All right. It's hubertcenters.com/cloudy, but you will have the recording access for your life or my life, whichever one of us passes away first. Who knows? But you will have access to it. So you want to go to hubertcenters.com/cloudy, hubertcenters.com/cloudy. You can also call this telephone number. I'll put in the chat box here in just a second. But let me put the link in the chat for you. Paste, send, and then I'll put it right here. And then I'll answer questions, and I'll look at symbols if I've got enough time here. Send to all. You can also call this telephone number, area code 859-963-3445. Paste and send to all. Okay, there you go. All right, let me get a couple questions answered here. This is Patricia in Florida from 2 years ago. I'm finally making money with your cloud course. Was one of the reasons. Thank you. Oh, thanks. Appreciate it. Thank you very much. I'm finally making money. Cloud course was one of the reasons. Gotcha. Appreciate it. Can you go into more depth of explaining what the lagging line is telling us? I do in the course, Gary. It's more of a confirmation of a new change trend. Yeah. I've been there. Let me see. Is there an updated price for new added info? There's not any new updated info, Scott. It's an evergreen course. The updated new info is just we scan it every week for the next 4 weeks. Yes. Is there a number to call? You can call the number, area code 859-963-3445. I just put it in the text. Now, if you've taken it in the past and you need a 4-week refresher course on the scans, just call the office and talk to one of the people that take your telephone call. It'll be Karen or Jared or Sarah, and just tell them like, hey, I need a little refresher on Ichimoku. They'll look up, make sure that you ordered it before, and we'll throw you in there for the 4-week scans again if you need that. That's not a problem at all. We'll be more than happy to help you out. All right, let's see. Oh, I bought the course 3 or 4 years ago. Yeah, Scott, for you, just call the office. They'll give you access to the current course because you should always have access to it because you're a lifetime member. And like I said, if you need 4 more weeks of scanning, we'll take care of you. No problem at all, brother. Does it scan for Bitcoin? Yeah, you can. You can scan. It'll work on Bitcoin too. Yep. How do you determine the price targets? I covered that in the course. So what I'm going to do here is I think I've got 8 minutes. You guys want to do kind of like a lightning round? where I just do symbol after symbol after symbol. All right, so you got to do it in cap locks because GoToWebinar has about an 8-point font, and I can't see little letters because I'm getting old. All right, I'll do this fairly quickly. Let me see how quick I can do this. COST. Costco is sideways in the cloud. Leave me alone. NVDA. NVIDIA is a great looking long, probably going to go to 450. ABBV. Good looking long, stop 90, target 110. NOW. NOW, good looking long, stop would be like 378, target would be 450. W, good looking long, stop 170, target 250. Can you use it on Forex? Yes, it works great on Forex. MOW is doesn't like much art. MOW. Amgen, in the cloud, leave me alone. Amgen, leave me alone. MSFT, Microsoft, good looking long, stop, I would say 180, target 220. ET, in the cloud, leave me alone. XLE is wait until it closes, excuse me, wait until it closes back above 40.59 with a target of $50. Can you use algo trading program signals using TradeStation Easy Language? Yeah, you can. You'll have to hire a decent programmer in order to make that happen, but yes, you can definitely do that. GLOB, good looking long, stop 127, target 160. JP Morgan, in the cloud, leave me alone. How do you combine the 1 day, 1 hour, and the 10-minute charts and trading? I don't have enough time to go into it in this presentation because we only have an hour. I got 6 more minutes. It's covered in the course. And I know it's kind of a shitty answer, and I know it's not what you want to hear, but I just can't do it all in an hour. Sorry. XLV. XLV is a good long at 95, target 110. GMED, GMED. If it can hold, the stop would be 45 and the target would be 55. Okay, let's see here. I lost my place. Daggone it. SRNE. Looks weird just because it's a stock that's below $5. It's a better long than short. Target 618. AAPL. Great looking long. Target 400. Stop 327. WDAY. Good long, stop 168, target 187. CSCO. All right, it closed back above the turning line, probably going to the standard line at 45.97. Me personally, I would let it close above 45, get long there, and then target 52. ERW. I probably typed it in wrong. MAS, good long, stop 44, target 55. The link is hubertcenters.com/cloudy, hubertcenters.com/cloudy. It is in the chat box, and the telephone number is 859-963-3445. All right, I've got 4 more minutes. How is the loss rate? It's not bad. It depends on how big of a stop you're going to use, Rob. If you use big old wide stops, it's going to cost you more money. If you use tighter stops, it's a little bit easier on you, right? There's nothing out there that is 100%. I don't care what anybody tells you. A lot of times when you're looking at it, you're going to be right 40, 50, or 60% of the time. It just all depends. So you need to make sure that you have a really good risk to reward ratio and all that stuff. Yep. All right. SPY is just the S&P. But I'll do it. SPY, good looking long, stop would be 299, target would be 320. TSLA, Tesla is a good looking long with a target of 1063. The course shows you that risk to reward rate and stop loss. Yes, in the course I cover stop losses, risk to rewards. I also go through how to pick your individual stop loss for you, not me, because your stop loss might be tighter or wider than mine. And we also cover the parabolic SAR on how to properly use a trailing stop. Gold at GC. Gold is sideways. It's a better long than short. It probably goes to 1800. Zoom, pretty simple. It's going higher. Zoom, next target will be 250. You could buy it on a pullback at 214. It's probably going to go north of 250. Let me see here. Amazon, AMZN, Amazon, good long, stop 2,500, target 3,000. All right, I've got 2 minutes. I'm going to give you the link one more time. Snap, SNAP. Snap. I know I didn't get to everybody's question. I apologize. All right, Snap, good looking long, stop 1898, target $26. I'm going to give you the slide here again. So if you want to be one of the few that can enroll in this lifetime access to this course, 28 people, it is $297. You get the entire course for life. And then I'm going to scan the markets with you for the next 4 weeks every Tuesday. Okay. It is hubertcenters.com/cloudy. It is in the chat box. You can also call area code 859-963-3445. And now what I'm going to do is I'm going to turn it back over to my partner, Jeanette.